Okay. All right. Hello, everyone. Hi, how are you? Great to see you again. So today is the 15th of April on Saturday. So I hope you're having a great weekend right now. So since markets are closed on Saturdays, when I do live streams, I sometimes talk about some psychology or money management topics, but today I will share my trade performance between January to and March this year. So I have the spreadsheet that I usually use to track my record. So based on that, let me explain how I took my trades and also my psychologies behind, so that possibly you can learn from the way I take trades and also the way I do the risk management and also exit the trades. Okay. Alright, so now let me switch screen. Okay, and I see lots of comments today too. Thank you very much for joining. Let me start to say hi to everyone. Alright, John, good to see you. Thank you very much. And Derek, good to see you also. Thank you very much for joining. Alright, Rain and Ty, good to see you. And Win, good to see you too. Alright, and Kevin and Photo, thank you very much for joining. FX and Tan, good to see you too. Alright, Nak and Augustine, good to see you. Alright, and TikTok, Kevin, Careful, and Homan, and everyone. Thank you very much for joining. Great to see you. Alright, Bim, good to see you too. Thank you very much for joining as well. Okay, so yeah, for me, today's been a relaxing day. I was actually at the cafe almost all day today. I was reading some books and also do some works a little bit. I am thinking to edit the website right now, my own website. So I was thinking some ideas to edit the website newly. So that's basically what I was doing today. And play some games. Play some small games also on mobile. Okay. Alright, SAS, good to see you. Thank you very much. Emad, thank you very much for joining. Homan, good to see you too. Alright. Aran Riang, good to see you too. Alright, Manhor, good to see you too. Thank you very much for joining. Welcome back. Alright, Alex, good to see you. And Cyrus, thank you very much. Okay, Appalachian, thank you so much for joining from Poland. And Ollie, good to see you too. Alright, so now let me share the spreadsheet, which I have it here. So, okay, here we go. Okay, can you see the spreadsheet, everyone? So this year, I decided to share my trade performance every 3 months instead of one month, 2 months. Last year, I shared my performance every month, but I thought that it's too short to share the performance because in some months, I don't really take trades. I become quiet because of the ranging market, or simply I don't feel like taking trades, or I was on a trip. So basically, sometimes there's nothing to show by the end of the month. So I think, and also in terms of my trading strategy, is a trend follow. So I thought it would be nicer to share it on the in a longer term, because I don't really look at the performance every month because it depends on the markets. But I do look at the monthly, not the monthly performance, but more of the yearly performance. But you don't want to wait for 1 year to share my performance next time. So that's why this year I will share it every 3 months is the idea. So yeah, so overall I got the return of 10%, 10.4% for the 3 months between January and March, which is not really good in my performance in general. But the most important is I didn't lose big. So this was due to my risk management skill. I was able to make some profits for the last 3 months. And what's more, the PF is good. PF 3.12. So that means PF means the profit factor means risk and the reward ratio in terms of money. So every time I take trades between the loss and win, my PF3 means my performance is 3 times profit against the loss, and that's what PF means. So when you take trades in the live market, whichever strategy you use, especially when you're using the trend follow strategy, then I recommend you to aim for PF3 or above on the live market. So I don't really care about the returns. I don't really care about the win rate. Win rate for me is 32.35%, which is not really great. But because my PF is relatively good, that's why I have some returns over time. So I value the risk and the reward ratio more than the win rate. And that's what I can see from based on this win rate and the PF. Yeah, also I do look at the number which is called R multiple. And R multiple is actually calculated by the average profit divided by average loss in terms of pips. So R multiple means the risk and the reward ratio in terms of pips, and profit factor means the risk and the reward ratio in terms of money. And I do look at these ones, and I aim for 3 or above on these numbers. So my impression for the last 3 months was that the market has been really choppy, and I wasn't able to capture big trends. So if I just quickly look at my trades, I got Pound USD on the 18th January. I got 64 pips and 55 pips. And then also in terms of other winning trades, Pound JPY, which I took on the 14th February, I got 46 pips of profit. And then USD JPY on the 24th February, I took 75 and 60 pips. And the last bigger pips trades was on AUD USD. On the 7th March, I took 84 pips and 77 pips. So yeah, like this, I usually aim for more than 100 pips in target. But because the trends were not really lasting that long for the last 3 months, I wasn't able to get more than 100 pips on these markets based on my strategy. So that's one. And also looking back, I had a trip to Singapore in the month of March, and when I was there, I didn't really take trades. So that's also one of the things I have to mention. Also, in early January, I have been very busy. So I saw some trends in January, but by the time I came back to chart and screen charts, the trends were already gone, and I wasn't able to go in the markets. So I have missed lots of opportunities for the last 3 months is my honest feeling. So I took only these trades. So, but the most important is that I don't lose big. If you look at the drawdowns per trade, the most drawdown I took was 0.53, 0.54, here too 0.52, 0.53. So my main focus is in the risk management. So, and that's why my win rate is so low, because I exit very early timings, and that will be counted as a loss. And that's why my win rate is big. Win rate is small, but my drawdown is very small, and that's why. And also break-even trades. I've had 9 break-even trades, which is a lot. And losing trades was 14. So together 14 plus 9, I got 23 break-even and losing trades, and I only won 11 trades. So my win rate overall has been really low because of the choppy market for the last 3 months, but I managed to get some returns, was my impression. So it wasn't really easy to trade for the last 3 months. And also, my impression also is that every time the news happens, that the market tends to go against the major direction. So if one of these news followed the major direction, then I may have been able to make more profits. For example, the CPI last week in the US, when it happened, the market, almost all the markets went backwards. So I have seen these examples on many pairs. So at the news, it didn't fuel the market trends, and that's why I wasn't able to make that big profits. So before the news happens, I usually set the break even and leave chart. But I remember some of these trades were taking loss or break evens before the news. I just exit manually with break even, small loss, like this one. The one I took on the pound JPY on the 14th February, I exited before the news on the break even and the win. So like this, and remember that the market went down against me afterwards. So yeah, the news has been really affecting against the major direction, and that's why it was a bit difficult, is my impression. I basically not really aim for bigger pips. I just follow whichever trend direction goes, and I exit whenever the trend's over. So that's my strategy, and I don't have the targets in terms of pips. But I do put the stop losses every time I take trades and calculate the lot size accordingly, so that I calculate the risk per trade, and I make sure to exit earlier timings whenever the market goes back against my direction right after I enter the trade, which happened so many times for the last 3 months. So, and also what's more, some of these trades I didn't take 2% actually. For example, so usually I take 2% to stop loss and I calculate lot size according to that. But for example, here you see lot size 5 times 2. So for example, Swiss franc JPY, which I took on the 15th of February, 5 lot is not that big for me actually. 5 lot is actually less than 2%. Less than 2%. 10 lot is less than 2% to stop loss actually. But it was, I saw some resistances nearby, or the FTMO, or the candlestick patterns didn't look great, and that's why sometimes I lower the risk per trade intentionally. I didn't take full 2%, lower the risk per trade, and then take entries. So that's why sometimes my drawdowns are so small, like these 4 trades, Swiss franc JPY and the USD JPY, I got the loss of 0.12% times 2 only, and 0.21% times 2 only too. So yeah, so that's why my drawdowns are also very small because of this risk management. So I say, my strategy basically is to take 2% to stop loss, but you can be flexible too. If you're not confident, then lower the risk per trade, even 1% or even 0.5%, you lower the risk to stop loss and take trades. Sometimes, based on your experience, so let's say you have let's say the market goes up and up, for example, and you see higher time frames bullish, you get nice entry confirmation, but when you're about to take an entry, let's say the price is near the resistance, and that resistance has in long wick, for example. In that case, although you see bullish confirmation, you may want to either stay away and wait for the breakout of that resistance, or you lower the risk per trade, for example. Or sometimes the market has been very choppy like this in the 4-hour or the daily, and then it starts to move up like this. And when I see the Kumo is bullish and Kijun Sen points up like that, I wasn't sure if the market breaks the resistance or not. And this is another example where I would lower the risk per trade, and so that whenever the market goes back, I exit with the very small drawdowns. But if it breaks, if the market breaks that resistances, then I keep holding the trade, and also I add more positions here to buy. So I'm kind of testing the trades, testing my analysis, whether it becomes true or not. And if it becomes true, if the market breaks according to my scenario, then I was going to add more positions and follow uptrend. So that's what I was doing also for the last 3 months. So I was a bit, how do you say, like opposite to aggressive. I was not really aggressive on my entries for the last 3 months. So I also intentionally didn't take the trades, didn't take opportunities whenever I see the opportunities. I think the trader's job is also to wait and also to stay away from the market rather than just taking trades. Sometimes we have to be away from the charts if you're not confident, if you don't feel right to enter trades, although you have the confirmations. You can also stay away from the markets and see how it goes. And I think this part comes from the experience. Sometimes something on the chart patterns or the candlestick patterns or Kumo thickness or Chikou span location to the prices, whichever I see, sometimes I don't feel comfortable to be in the trades. So sometimes I went against my trade strategy and didn't take that trade. So that's why I take less and less trades for the last 3 months. So that was my impression for the last 3 months. So, and so again, the news usually didn't go towards a major direction. News didn't break the major resistance support sometimes, and that's why it was difficult to trade. And also sometimes lots of range market, and when it breaks, it just happens one day, and then lots of fake out happens also. So I have to exit with a break even or small losses along the way. So so that was my impression. So how was your impression for the last 3 months? If you took any trades in the live or demo account, how was your impression? Please let me know on the chat. I would like to discuss about that too. So I think as a trend follower, the market has been very difficult, I think, to take trades recently. We have to be very selective on which pair to trade, which time frame to trade, and when to trade and when not to take trades. Okay, alright, let me see. Hello Alexandra, thanks for joining, good to see you. Alright, Best Baby, thanks for joining. Hinata, good to see you too. Alright. Alright, John says, nice to see your losses don't pass the 3K limit. Right, yeah, my losses are kept small over time. Yeah, on your 9K win trade, the analysis says 4-hour flat and M5 breakout. Which one is it? The let me see. 9K win trade. You mean this one over here? Or here, yeah? Yeah, I think it was hold on, I think it was on, yeah, this was when I exit the trade. When I exit my trade, 4 hour became flat and M5 breakout against my direction, and that's why I exited on the stop losses, and that was my memo. So like this, whenever you take trades, whenever you enter exit trades, just take memos, small notes and memos, and take screenshots of your entries and exits so that you can look back your own trades. I post my trades in Discord, and so that I can look back my own trades every month's end, like that. Okay, Huisman's good to see you. All right, Alex says, do you think the next quarter of the year will have better trends? We never know. I'm not sure. I am not really sure. So whenever there is trends, you follow. Whenever there is no trends, we stay away. Yeah, I have that very simple mindset. But yeah, if I just go deeper than that, the patterns has been different from last year. Last year, I remember that we had more trends. Let me pull up my performance last year. Just hold on. Let me see. I remember last year, 2022, we had more trends in January to March. Okay, so this is my yearly performance. In 2022, I got the return percent of 9% in January, in February 16%, in March I got 62%. Yeah, now I remember that March was my best month last year because I got huge profits. Let me see, March. Yeah, I got one of the trades on Euro AUD, 329 pips, and Pound AUD. On the 3rd of March, I got 462 pips and 455 pips. So the month of March has been great, but this year, no. So that's how different the markets are. So that means we may see big trends in April or May or June. Like these patterns has been changed. Even in 2021, my performance return percent in January 6%, February 15%, and March 12%. But this year, I only made 10% in 3 months. So the pattern has been different. So that means again, we may see big trends because stop losses should be accumulated within the market when it's ranging. So once the stop losses are taken, I think we will see big trends. But again, I don't really expect when it happens. I simply monitor charts every day, and when I see trends, I follow. If not, then I don't take trades. Okay, I see many comments, so let me see. Okay, John says, based on your strategy, I stick to 2% stop loss. When I see the market to become unstable, I move my stop loss to close out the position to cut my losses quickly. I think that's good. Yeah, I do that too. And I don't always take 2% risk per trade. Yeah, crazy news reactions at the moment. Yeah, that's right. Yeah, Oli says your risk management is so great, and what you said is very true about being careful, especially when taking trades near support resistance zone. It's exactly what I have been doing, and it has kept my account safe. Yeah, that's right. That's right. Yeah, so even if it breaks, even if you see the breakout, you have to be careful too, because sometimes it becomes a fake breakout and the market reverse within the support resistances. So yeah, I think we have to be very careful on our trades recently. But yeah, I think yeah, let me see some other comments. Okay, where are your entry strategies analysis? So I have my entries here stated, the date and time and the price and the stop losses. So these are the stop loss pips I took. So I took the max stop loss I took was 52, which is a bit wide. Usually I prefer to take the stop losses less than 40 pips. But yeah, overall I think in average is almost like 40 pips or maybe more than 40 pips of stop losses. I feel a bit unsecure to put the stop loss of 15 or 20 in the recent markets. So yeah, stop losses I take a bit wider too for the last 3 months. Yeah, Kai says, I did backtest your UJ trade in 224, okay, February 24th, which was not transparent because it was hit stop losses. Okay, maybe your stop loss was too small, maybe. Yeah. Okay, Derek says, agree with you on the last quarter, more favorable for traders on the scalping reversals patterns. Yeah, I think so too. I think so. But I stick to the trend follow strategy. Sometimes I don't take daily or 4, sometimes I only take 1 hour to follow. And I don't look at the higher time frames, I simply take 1 hour to follow and lower the risk per trade also. Like for example this one, in January 11th, EUR/JPY, I took only 1 hour and M5. I didn't take the 4 hour or the daily time frame in this particular trade. Yeah, in Tokyo Box breakout. And then the market went back and hit the break-even lines. So yeah. So yeah, that was what was happening here. Okay, Sneaky, thank you for joining from Taiwan. Good to see you. Okay, Alexander says, Kei, you recommended the 15-minute time frame for stocks. Question is, do you recommend to wait until the candle closes above or below the critical level or not? Legs say in 1 day and 1 hour, all is good. You don't have to wait for the breakout on that lower time frames. Whenever you see trends in higher time frames, then lower time frame should break is my strategy. So because if you keep waiting for the resistance support breakouts on all the time frames, then you may miss out some entries. So you better wait for the breakouts on higher time frames, but not the lower time frames in general. Yeah. So for example, like if I see some of the markets, for example, EUR/JPY is bullish on the daily time frame, and Friday closed the candlestick above the resistances. So yeah, the market may be bullish from next week continuously. And then there is a resistances here too still. So it broke the first resistance, but looks like it's still on the second resistances. So how I think about it is that if you wait for the breakout, then it might be too late. So what I do is I enter trade. If I see this is a valid confirmation, then I enter trade right now and expect the breakout to happen. And if it doesn't break, then I exit with a very small drawdown. It's my strategy. And I do this near the resistance support or when it was trending up or down. So because of this risk management, if the market becomes reverse, then I exit in a very small drawdown, so I don't lose big anyways. But once it breaks, here, it goes really fast and it grows big. And sometimes that's how I make these huge profits. So I enter trade before the break happens and then follow the breakout direction. But I have to see the right setup to enter trades when I use that strategy. So it's all about the risk management after all. Whether you take trades during the trending market or near the resistance, it's all about the risk management. Yeah. Okay, let me see. Kevin says, do you think last week was difficult week to trade as most of the Forex markets were so choppy that we could not make much profit? What do you think about the market last week? Yeah, last week I think it was very difficult. Yeah, I took some trades and took some losses last week. So I think it was difficult. Whenever I screen charts, I wasn't able to find that right setup to take trades. So here too, Euro AUD, the news actually didn't break that resistance, but instead it went back, it went down on 13th April. So if it broke that resistance at the news, then next week trend most likely will continue. But because of this kind of tricky markets, it has been really difficult, was my impression. Yeah, and also before the big news on the 13th last week, the market was a bit ranging, kind of quiet. So I couldn't see any like big trends and stable trends too. Yeah, USD CAD went down, so I was going to sell on this one. But yeah, I think the market has been choppy, so this is, I think, the big challenge for the risk management. Yeah, so that's my impression for the last 3 months. So next time when I share, it will be the end of June or July. In early July, I will share my trade performance for the next 3 months. So see how it goes. Okay, Alexander, you're welcome. But yeah, again, my message, as always, is to track your records manually like this way. And you don't have to use the spreadsheets like this. You can just type in the pair, the name of the pair, and also date and time, and sell by, price, lot size, and a stop loss. And then also write the exit timing, exit prices, and note down the profit or loss in terms of money and in terms of drawdowns, and that's it. And take memos. Because by doing this manually, you will really remember the patterns of losing the trades every month, and you start to see the losing patterns, which is important. And that's why when you see the next time the losing pattern of yours in the market, although the strategy may say yes to take trades, you can just stay away. But if the setup is your winning pattern recently, then you can be more confident to be in a trade and expect the profits. So, but all comes from your experience of tracking your records one by one, and also looking back your trades every month's end. And this discipline becomes really the key, I think, to success. I have been doing this for the last many years. I have my own spreadsheet, and I track my records every year, every month. And sometimes I even look back my performance, like a couple of years ago. And sometimes I laugh myself, because if I were trading then I would never take trades like that. I feel like I was so immature in my trading skill like a couple of years ago. So, and sometimes I see some lucky shots in my trades, 6 years or 7 years ago. So yeah, I can really feel that I have learned so much. I got so much wisdom, much more than before, and you can actually see that your progress by tracking your own trades performance. So so that's what I do. Yeah. So yeah, all right, Ollie, you're welcome. Thank you very much. And Kevin also, thank you very much for joining today. Okay, so yeah, I think that's it for today's live stream. And in about 20 minutes, there will be an Ichimoku membership live. And today, I will introduce the Kihon Suchi concept from the original books of Ichimoku. So yeah, I will see all Ichimoku members in 20 minutes, and I will do the weekly forecast tomorrow on Sunday. So yeah, I will see you also tomorrow. But anyways, thank you very much for joining. I hope you have a great weekend, and see you on the next one. Until then, please stay healthy, stay safe, and stay gold. Bye for now. Mata ne. Thank you very much.